What's up, guys? In this video, I'm very excited for this video, guys, because I'll be explaining accounting paper 2, the fundamentals of accounting. The code is 9706. I will be putting the link of this past paper in the description, so just be sure to check that out. So we have 9706/21/May June 2025. This paper is 1 hour 45 minutes. So let's get started. Question number 1 says, Bilal provided the following information for his service business for the year ended 31st of December 2024. So it says receipts and payments for the year ended 31st December included. We have receipts. In the column of receipts, we have cash fees, fees from credit clients, rent received, which are those amounts there. We have payments, are the ones below. Now here we have some additional information, and we're asked to prepare the statement of profit and loss for the year ended 31st of December 2024. This question is 14 marks, so that's a really good amount of marks. But unfortunately, it also means that it's going to be difficult. But anyway, now I've made another video covering the correct format of the income statement. So if you have not watched that video, then be sure to check it out at some point. Now, according to that format, we have to find the profit of the year ended 2024. We have to take the revenue minus the expenses, which we have here in the income statement. The same format they used. Let's look down here. Yeah, here it says we have the revenue, this one here, then we less expenses to get the profit at the end of the year. So this is what we need to do. Here we take the cash fees, which is 78,444. Then we plus with the credit fees, if I'm correct. Let me double check. Yes. So we take the total fees, which is the cash fees plus the credit fees, to get the total basically revenue, or the total receipts. So what we'll do, to find the credit fees, which is the harder part, we will take trade receivable information here. It says on 1st of January 2024, trade receivables were 15,800. And on 31st of December 2024, the trade receivables again were 11,600. So what this basically means is that at the beginning of the year, we started with trade receivables of 15,800. Therefore, those trade receivables were basically from the previous year, which is 31st of December 2023. So those trade receivables were just brought down into this year, which is 2024. So to find the trade receivables for this year, we take 15,800 minus 11,600, because this one is for the closing and this one's for the opening. So to find the trade receivables that were used in this year, which is 2024, from 31st December all the way to from 1st of January all the way to 31st of December, we just take 15,800 minus 11,600. 15,000, sorry guys. Yeah, 15,800 minus, sorry guys. Okay, let's start again. 15,800 subtracted by 11,600. What do we get? We get 4,200. Now this amount is the total trade receivables which we used during 2024. So now this amount, what we need to do is we take this amount, then we subtract it from the fees from credit clients. This is because when we say fees from credit clients, what we basically mean is we have a business, right? And in this business, we had some clients which we were supposed to receive money from, basically fees. But then now we chose to give them fees on credit, which means we gave them the service to our clients, but then they did not give us the money. Therefore, they owe us. They need to pay us money. Hopefully you understood. So we take 34,290, because the credit transactions, we always less credit transactions. 34,290 less 4,200. We get 30,090. Now this amount, we have to plus it with the cash fees to get the total fees, which will be our receipts for this question. So we take this amount plus with the cash fees, which is 78,440. What do we get? We get 108,530. Now this, my friends, these are the amount of receipts or revenue in the income statement. So now after this amount, which is basically the same as this one here, the same amount, we will have to less expenses. But before that, we add other incomes. So what are the incomes here? We have rent received. Yeah, we have rent receivable. Now, let's read here. It says, on 1st of January 2024, the allowance for receivable debts, irrecoverable debts, was 6,632. On 31st of December 2024, Bilal decided to increase the allowance for irrecoverable debts of 1%. So what do we do here? Okay guys, so continuing from point number 3, it says on 1st of January 2024, the allowance for irrecoverable debts was $632. And on 31st of December 2024, Bilal decided to increase the allowance for irrecoverable debts by 1%. So if you guys are doing maths, you would have known that there's something called cross multiplication. So what we do, we'll create a column for, let me see if I can illustrate. Just a minute, guys. So this is what we'll do. We can create a column for, just a minute. Yeah. So we have a column. Yeah, so at the beginning here, it says 1st of January 2024, the allowance was 632. So we just write it here. Oops, sorry guys. 600. This is difficult, guys. Let's try this. 632. So 632, which is hopefully there. I don't know if you can read it. Forgive me. So we have 632. And then after we equal it to which amount? To basically equal it to 15,800. Because it says here 15,800. This is our trade receivables for the beginning of the year. So we have 15,800. which I don't think I'll be able to squeeze it. But hopefully, guys, I've made a little time lapse, so you don't have to see me writing all this. So yeah, 15,800 right there. So we make it equal to the other amount, to trade receivables at close, which is 11,600. So 11,600 right there. So let's name this side X. So now what we'll do, we take 632 multiplied by 11,600 divided by 15,000 to find X. Because we're just trying to solve for X, guys. So after doing this calculation, which is basically 632 multiplied by 11,600 divided by 15,800. What do we get? We get 432. But guys, what's the problem? Why is when you go in the marking scheme, we don't see this amount. We see 52. Now notice here, it says here, the irrecoverable debt increased by 1%. So that's the problem, guys. We need to increase by 1%. So what we'll do, we'll start again. We take 632, divide by this amount, like this. 632 divide by 15,800. We get 0.04, which is basically 4% in percentage. Now this 4% is the original amount of irrecoverable debt at the beginning of the year. But notice here it says Bilal decided to increase by 1%. So 4% plus 1%, we get 5%. Now this 5%, now this amount is the amount that we will multiply by 11,600. Now what do we get? We get 58,000. Now this 58,000 is the same as 580 in percentage. Yeah. Now what do we do with this amount? First of all, to find the amount of decrease in allowance, sorry guys, decrease in allowance. Just a minute. Yes, so what we'll do, after getting this amount of 58,000, this amount, if you didn't know guys, 58,000, 58k, is equal to 58%. So what we'll do, no, it's equal to 580, because the two zeros are just a percentage. So 580, we take that amount, we less with 632. So we take 632 minus 580, we get 52. Now this 52 is the increase, the percentage increase in allowance. Hopefully you guys understood. We can correlate with the marking scheme. We get this amount here. Now as you can see, the original allowance, we did it there, 632 divided by 58,000, 4%. Now each step we did here is 1 mark. So in the exam, if you get stuck on maybe the first or second point, still be able to write them, because you'll get 2 marks out of 3, which is better than getting no marks. Yeah. So this is the original allowance. We plus the 1 to get to 5%. Then we times it by 11,600 to get 580. Then we minus to find the decrease in amount. 632 subtract by 580, we get $52. Now that is our income. So if you remember from the cash fees, amount, we had 4,400. So to find the total receipts, we take 4,400 plus with 52. What do we get? We get 4,452. Now this is the total revenue, which we can see here, 4,042. No, sorry, this is basically the total amount of income. So we see here 4,400 plus with irrecoverable debt. Those two are both incomes. Because what is income? Income is basically the scenario where we provide a service, but we have not. Basically, we lose something to give a service. So we have rent receivable. Rent receivable is basically when we give rent to other people, so basically we lose housing of our own, but we receive money. So this is income. So we have rent receivable, which is income. Then we decrease the allowance of irrecoverable debt. So in total, we take the revenue, which we calculated the first part. Revenue. Yeah. Revenue was 108,530. Which, remember, we got it by doing the cash fees plus the credit fees in this part. We took the cash fees, which is this one, plus the credit fees from credit clients. Yeah, so we got the revenue, which is 108,530. We plus it with the incomes, which is this one, to get the total. To get basically the total revenue, which is 112,982. Okay, my laptop is about to die. Okay, let's continue. We have here, now to find the income, the profit, we take revenue plus the additional revenue, which is basically the other incomes. So take revenue, add other incomes, less total expenses to get the profit. So this is what we're going to do. We've already got the revenue, we've already got the incomes. So after adding the total, we'll get this amount. Here, this amount. So now we need to find the total expenses for this question. So let's go back into the question paper. Let's go down, total expenses. So notice here, we have non-current assets at 31st of December 2024, which were as proceeds. We have business premises, which the date we have there, 1st of January 2021. The cost is 120,000. Motor vehicle, we have 1st of January 2024, 26,000. And we have furniture and equipment, which is 1st of January 2021, which the amount is to 22,000. Now this is very important, guys. We see here, we have straight line method, reducing balance method. So what is straight line method? Straight line method is the method of depreciation. We have 2 or 3 methods. We have reducing balance method and straight line method. Straight line method is the method of recording which we do not subtract the previous depreciation. So for example, in this question we have the total cost for 2021. which is 120,000. So hopefully you've learned this, that to find the depreciation, we take the formula, which is cost minus scrap value, divide by the number of years. But here we're given the percentage. So we just take 120,000 multiplied by our percentage, which is 2%. We get 2,400, sorry, yeah. So if we were doing reducing balance method, what we will do is for 2022, we take 120,000 minus this 2,400 right here. So we take minus 2,400. We get this amount. Now this amount, we will times it by 2%. Hopefully you're following with me. Sorry guys, 2%. Now this is the amount of depreciation for 2022. That is if we were using reducing balance method. But thank God here, it says we're using straight line method for business premises. So we take 120,000 multiplied by 2% to find straight line method. Let's check if I'm correct. Give me a second. Yes. So we take the amount here. Yeah. So we'll go here. We take 120,000. Okay, let's do better than that. Yeah, 120,000. 120,000. We times it by 2%. 2%. What do we get? We get 2,400. Now this is the amount of depreciation for the business premises. Now after that, to find the amount for motor vehicle, just a minute. Yeah, so for motor vehicle, we will take 26,000, multiply by 20%. But guys, notice, we're using reducing balance method. So since we're using reducing balance method, the depreciation is going to be a little bit different. Just a minute. I'm trying to find something. Yes. So we'll take, let's go back. We will take this amount of 26,000 multiply by the percentage, which is 20%. Whoops. Okay, start again. 26,000 multiplied by 20%. We get 5,200. Now let's double check here, because we have here, it says carrying value at time of sale, end of 2021, end of 2022, end of 2023. Okay. Okay, so let's read here. It says number 7 right here. It says, during the year ended 31st of December 2024, our motor vehicle, which is costing 21,000, motor vehicle cost 21,000, was sold for 9,100. it had been depreciated for 3 years at 20% per annum using the straight line method. So what we do, it says here, a motor vehicle, which is this one, costing 21,000 was sold for 9,100. So we take this amount, we will times it by 20%. If I'm correct, 21,000. No. This is what we're going to do. So you guys know that in total we have 100%. So 100%, we will subtract 100% minus 20% to get 80%. Now this 80% is the one that we're going to use to multiply by 21,000. This is because 20%, which is here, 20% per annum, this is the amount which we're calculating per reducing balance method. So to find the one that we're calculating for this year, we'll take 100% minus 20% to find, because here, it says here, cost 21,000. Now this 20% is for 26,000. So to find the other amount, which is 21,000, we take 100 minus 20%, which is 80%. So this 80%, we take 21,000 times 80%. What do we get? We get 16,800. Now this 16,800 is the depreciation for the first month. I think, yeah, for the first month. No, for the first year, actually. Yeah. So this is what we're going to do. This depreciation which we got here is for the first year, which is 1st of January. Okay, guys. So, going back to what we're saying. So we have here, it says, guys, this question is actually quite hard. But anyway, it says here, during the year, this is number 7 on additional information, during the year 31st December 2024, a motor vehicle costing $21,000 was sold for $9,100. It had been depreciated for 3 years. So do you know what this means, guys? So this basically means that if it's sold on, if it was sold on this date here, it was sold on 31st of December 2024, then that means it was purchased 3 years before, which is 1st of January 2021, if I'm correct. So we're going to start calculating from the beginning until 31st of December 2024. So let's begin. What we're going to do is we take 21,000 multiply by 20%. 20%, let's check here. Sorry, I just forgot that it was 80%, yeah. So we take 21,000 multiplied by 80%. Now this amount, 16,800, that amount is the amount of depreciation for 31st of December 2021. Now notice this is reducing balance method. So we're going to keep going to find the depreciation of 31st of December 2024. So we take this amount, multiply by 80%. This amount is for 2022 times 80% again. This is for the year 2023. Now times one more. Times 80%. Okay, sorry, I made a mistake here. So we'll end at 2023. Notice it's because it says here, no depreciation is calculated or is provided on the year of sale. So this basically means that we'll not calculate it because we sold it on 2024. So we don't calculate depreciation for the year 2024. Hopefully you understood that. So we'll end on $10,752. So that is the ending amount. We check here, we're correct. So now, guys, we need to find the loss on disposal, or the amount that we'll lose on disposal. So guys, this is the amount of depreciation, correct? So depreciation, we have 10,752. Now we'll minus it by the amount that we sold the motor vehicle for, which is 9,100. We get 1,652. Yes, 9,062. Yes, this one here. So that is our amount for the loss of disposal of motor vehicle. So yeah, that's basically what we put. So less expenses, we put depreciation of motor vehicle, which was, check here, depreciation of motor vehicle, non-current assets. Yeah, so now this is the amount of the loss of disposal. But guys, we've still got some other non-current assets that we must calculate. Let's go back to the question paper. So let's save this amount. We need to save the amount. Just a minute, guys. Yes, so it's very simple actually. So since we've already done that complicated calculation about motor vehicle account and all those funny stuff, so what we're going to do is now we just do it simply. We take 120,000, multiply by 2% to get 2,400, which is this amount here, 2,400. And then after that, let's go back to the question paper. For motor vehicle here, we have 26,000. 26,000, we'll multiply it by 20%. By 20%, we get 5,200. Hopefully you're saving these amounts, because we're going to have to sum them at the end to find the total depreciation of non-current assets. So we take, after that, to find the furniture and equipment, we take 22,000 multiplied by 10%. We get 2,200. So after this, we take 2,200 plus 5,200 plus 2,400. What do we get? We get 9,800. Now this is the amount of depreciation for the non-current assets. Let's double check here. Yeah, we're correct. So we have 9,800. And then here we have the loss of disposal. Now guys, notice here, it's actually a whopping 5 marks. We get, but honestly guys, I feel like that's not really enough marks. We should have been awarded more marks. But anyway, yeah, so we put in less expenses, we put depreciation in non-current assets, which is 9,800. Then we put loss of disposal, because loss is an expense. And then we put the amount there. Now let's go back to the question paper. Okay. So now let's calculate another payment, which we have advertising campaign. Now here, advertising campaign, the amount is 4,500. So let's go down to the additional information we have here. Number 6. On 1st of November 2024, the advertising campaign commenced, which basically means start. And it will end on 31st of January 2026. Now guys, let's notice this. For this year, which is 2024, in the question paper, 2024. You see here, it says 1st of November 2024, all the way to 31st of January 2026. So these are so many months that we're not supposed to calculate. So what we're going to do is we're going to calculate the amount of advertising campaign for this year. Yeah. So guys, this is not actually that hard. What we're going to do, we calculate the months, which, funny enough guys, is just 2 months. Because let's see, 1st of November 2024, 1st of November and December, those are 2 months. Now all the other months is basically going to be prepaid. What is prepaid? I'm going to make another video about it in the future. But prepaid is basically when we pay an amount right now to receive the service in the future. So that is what the business did. So we receive this amount of 4,800 right now in this year, but we received it for the future year. So to find the amount that we received for this year, we're going to take 2, which is November and December, divide by the total amount of months that we're given in this question. So let's count. 1st of November, December, January, February, March, this is 2025, April, May, June, July, August, September, October, November, December. Now, 2026, we have 31st of January. So we divide by 15. What do we get? We get this disgusting decimal number. Now we'll times it by 4,500 to get 600. Now 600, sorry guys about that, 600 is actually correct. Here is correct. Yeah. So simply, we're going to put that in less expenses because it's another expense. Let's go back to the question paper. Now we have electricity charges. Okay, now on 1st of January 2024, electricity charges of 270 were outstanding on 31st of December 2024. And electricity charges of 490 were prepaid. Okay guys, so we're back. So what I said earlier was actually correct for most of the time, but in this situation we have to use our logic. So when we look here, electricity charges is 3,610. So what we need to notice is on number 4, it says, on 1st of January 2024, electricity charges were 270 outstanding. So outstanding basically means was not paid in this year. So basically, so when it says 1st of January 2024, that means it's accrued, brought down from the last year. So it's the amount that was not paid last year, but then we're recording it now in this year. So we have to less it from the total amount of electricity charges, because what they're giving, this data, is not actually for this year, and we don't want the ones for other years. So what we'll do, we take 3,610 subtracted by 270. We get 3,340. And then we have prepaid. Now, prepaid, as I said before, is the amount that we paid this year for next year's services. So we've received service, but we've not yet paid. So basically, we owe the person. So this one also we will less. 490. We get 2,850. Now this is the amount of electricity charges for this year without any additional amounts. Okay, so let's continue. Let's just double check the answers. Correct, this amount. Okay, now let's look at the other amounts. Now, when we look here, general expenses, just a minute. Okay, guys, so when we're looking at general expenses, we'll look in the additional information just to see if there's any other transactions that happened that was not recorded in the main accounts. So we scan quickly. Trade receivables, no. Allowance of recoverable debts, no. Electricity, business premises, we'll scan quickly. So we see no other additional information. So this basically means that we put this general expenses as it is into the income statement. So I'm pretty sure you'd have understood that. Okay, so we can look in the marking scheme. We see here that they put it just as it is. Okay, same with the other ones. Yes, same with the other ones. Motor vehicle running costs, we put it as it is. And wages and salary, we also put it as it is. Because we've checked here, we see no other additional information provided. So that's basically it for the income statement. Yeah, so now what we do, we put all the information given on the left column of the balance sheet we put all the information given on the left side of the income statement. As you can see in the marking scheme, they put all the transactions on the left side, and then we add all the sums and put them on the right side. So yeah, it's that simple. So we took revenue, right side, because that's the total of revenue. Then we put rent receivable and the additional. Then we put the total on the right side here. Then we find the total of the revenue, which is this one. Then we do the same for expenses. We put all the total expenses here. Then the sum of all the expenses is 48,702. Then now what we're going to do is we take the total revenue less the total expenses to get the profit. Because, for example, we have a business. Now, the business, we sell 20,000 blankets, let's say. Now, 20,000 blankets, now every year, when we're producing these blankets, we have some expenses, such as fuel costs, we have maybe electricity costs to manufacture the blankets, then we have to pay the people who actually make it, the manufacturers. Now, all these expenses, we will less it from the total amount, which is 20,000. So maybe let's say the expenses is 16,000. So we take 20,000 less 16,000, we get 4,000. Okay, guys. So as you can see, this is the total expenses. So what we're going to do, we take the revenue less the expenses to get the profit, as I explained. Now the profit is this amount here. We've already calculated. Next question, guys. Hopefully it's more simple. Now here, we're just going to write all the things that I calculated up here. We're going to write them in these spaces here, which will ultimately give us the total marks. Okay, now, additional information again. At 31st of December 2024, the cash balance was 8,950. B. Prepare an extract from the statement of financial position at 31st of December 2024 showing the assets section only. 7 marks. Okay, so what we're going to do, what are assets, guys? Assets are basically, okay, how do I say this? Basically, assets are those materials that we have inside the business that we can use them for selling. We have two types of assets. We have non-current assets and current assets. Now, in non-current assets, we have things like equipment, motor vehicles, and things like that. Now in current assets, we have two types of current assets. We have tangible and intangible. Tangible are the things that we can touch. For example, maybe we can say a bed, a blanket, shoes, car. No, car is a non-current. Maybe whatever you see around you that you can sell inside the business that is easily turned to cash is current assets. But then we have Then we have intangible, which is those current assets that we cannot touch. For example, goodwill or brand name. These things, we cannot touch them, but they're very advantageous to the business. So, statement of financial position is basically a snapshot of the business's performance at a certain period of time. So, what we're going to do, let's go back down. Okay. Yeah. Okay, so here's the information that we're provided with, same one. So what we're going to do is we're going to look for the assets that we have. Same assets, we have motor vehicle here, we have business premises and fixtures and equipment. Let's quickly go back to the income statement, to the marking scheme to check. Yes. So, it's very simple what we're going to do. I've not done this before in any of the videos, but the format of the statement of financial position goes like this. So we have assets column, which is split into two other columns, the non-current asset and the current asset. So in the non-current assets, we have things like, in this question, we're going to have business premises, motor vehicle, fixture and equipment. In the current assets column, we're going to have trade receivable, which is basically debtors, or those people that have not paid us a certain amount of money. So anytime we can sue them and get their money. So that's a current asset. And also, we're given cash at bank. Cash at bank is very much a current asset. It's actually the most liquid current asset because we can easily attain this money. So, first of all, we will put at the top assets. We put assets, the first column, they've already put it here for us. So after putting assets, we're going to put non-current assets here. After that, we're going to put motor vehicle, premises, business premises. Then we have, what else? Fixture and equipment here. After that, we're going to put the amounts of those here. After that, we're going to put the total. Let's cross check. Yeah. After that, we're going to put the total of all the non-current assets here. Then after we put the sum over here. Let's look at the market scheme, how they did it. Well, here they put just one single file. That can make it much easier. So we put assets here, then non-current assets here. Non-current assets, we have these ones. And after that, we have current assets, just the way I said here. Then total assets down there. So let's explain this. Let's break it down. So assets, we have business premises. Now, why instead of 120,000 they put 110,400? The reason is because notice, and when you go back to the information, it says for the business premises, it says that we sold some business premises. Where it says here, no. 9,600. So we're looking for why did they reduce? We're looking why did they reduce this amount? So let's check. Okay guys, so this is how we solve it. So we're going to take, to find the business premises, which is 9,600, this, okay, let's see. Okay, let's put on the charger. Okay, so let's look here. So you see here, it says 9,600 business premises. So this amount right here, this is how we're going to get it. So first of all, you can see here that business premises, this one, yeah. So business premises, the price that was bought for was 120,000. Right? So we take that amount, 120,000, and then 120,000, we multiply it by 2%, which we get 2,400. Now that 2,400, we can see here it says that amount was purchased on 1st of January 2021. And this year is 2024. So when we count the number of years, we have 4 years. So we take 2,400, multiply by 4 years to get 9,600. Now 9,600 is the accumulated depreciation for business premises. So the original amount of business premises, we have it. Just a minute. Check here. Yeah. We have it here. 120,000. So we're going to take 120,000 minus 9,600. What do we get? We get 110,400. Okay, and then let's check here. Motor vehicles and fiction and equipment. Okay. Fixture and equipment. So what we're going to do for motor vehicle, we can see here, the date of purchase is 1st of January 2024, and its costs is 26,000. And the depreciation method we used is 20% reducing balance method. So I want to see what happens if we try to... Okay. Okay, guys. So when we see here motor vehicle, the original price is 26,000, and then how do we get this 5,200? So what we're gonna do, remember on this previous part, number 1A, what is the amount that we got for motor vehicle? If you don't remember, then we got, I don't remember either actually. Let's check here. We got 5,200. So 5,200, see, it's the exact same amount. So we take 26,000. 26,000 minus 5,200. We get 20,800, which is this amount here. Okay, now for furniture and equipment, 8,800. 8,800. Let's read the additional information here. Okay, guys, so let's continue. We have seen that the amount of furniture and equipment here is 22,000, correct? So we take 22,000, multiply by the percentage of depreciation. So we take multiply by 10%. Hopefully you're following. That is not correct. 22,000 multiplied by 10%. We get this amount of 22,200. Now it says here the date of purchase was 2021 of 1st of January. But guys, the year that we're in right now is 2024. So what we're going to do is we times this amount by 4 years to get 8,800, which is correct. This one. So after we do this calculation, we take business premises, subtract it, each one. We'll get these amounts. Now the total of the assets, of the non-current assets, is 144,400. Now we're going to trade receivables. Trade receivables, remember, the trade receivables here was 15,800 and 11,600. Okay. Okay, so guys, this is what we're going to do. So notice here we can see that, but guys, we need to know that in statement of financial position, everything that we record is from 31st of December, or basically, not everything, but most of the time, everything that we record is at the end of the financial year that we're given. So in this question, we're given the financial year ends on 31st of December, 2024. So all the transactions that we record must be at the end of the year. So in this question we will take trade receivables at the close, which is 11,600. 11,600. But then we need to notice, guys, that trade receivables. Yeah, we need to notice that you see here, it says the allowance number 3 on 1st of January 2024, the allowance of irrecoverable debt was 6,632. On 31st of December 2024, Bilal decided to increase the allowance by 1%. So, let's do this. Okay, so what we're going to do, guys, let me explain what I just did. So I took 62 divided by 15,800. We get this amount. This is because 632 is our opening balance for irrecoverable debt, and trade receivables opening balance is also this amount, 15,800. So we take this one divided by this one. Basically, we take the amount that we have not received, divide by the total debts of that period. We get this amount, 4%. Now this 4%, notice, guys, we have to plus it with this 1% here because it increases. So we got 5%. Now 5%, when we multiply it by 11,600, we get 580, because 5%, 11,600. Guys, I'm really getting clumsy. I need to go to bed. 11,600 multiplied by 5%. We get 580, which thankfully is the right amount. Yeah, this amount. Trade receivables. So we quickly take this amount, 11,600 minus 580, to get this amount. This is actually only 1 mark for some reason. Now we need to find the amount of other receivables. Now they wrote here advertising campaign 3,600 plus electricity charges. Let's check here. Okay, so guys, what we're gonna do, if you remember from earlier in the video, we calculated that advertising campaign, this one, will be 600. This is because, quick summary, 2 divided by 15 multiplied by advertising campaign, 4,500 here. $600. Now this 600 is the advertising campaign, but the problem is that it's for the beginning of the year. Now we just want to find the end of the year. So what we do is we're gonna take 4,500 minus 600. We get 3,900. That's the amount for advertising campaign. Now to find the amount of electricity charges, funny enough, electricity charges says here on 31st of December 2024, electricity charges of 490 were prepaid. Now prepaid, I've already explained that, but I'll make another video explaining it in more detail. But we always take the 31st of December amount, the end of the year. So we'll take 490 because it's the only amount that we're given for the end of the year. So once we take this one, advertising campaign, 3,900 plus 490, we get this amount, which we just put it here. Now, when we're nearing the end of this video, guys, so we take cash at bank now, which we're already given, 8,950. We put it here. We find the sum of the current assets, which are these ones. Now, something I did not tell you guys is prepaid is actually a current asset. This is the reason why. When we say prepaid, it's the amount that we received this year. We receive, basically, prepaid is when we've paid money, right? But we've not received the service. So that's why it's a current asset, because the company owes us a service. So, because of that, prepaid is a current asset. So anytime when we want, we can quickly sue the company or ask the company for the service. So we take all these current assets, including the prepaid, we get this amount. We get 2,400. 24,360. We take 24,360 plus 144,400. We get this amount. So guys, that's the end of the video. Thanks for watching. Don't forget to subscribe. Guys, I'm so tired. It's literally almost 10 p.m. midnight. So guys, support this channel, subscribe, share with your friends and family. Also, not to forget, in the next episode, hopefully, we will finish explaining this past paper. So, yeah, see you in the next video.